Welcome back, everyone. Welcome to Mike on Money. My name is Michael LeBlanc, Director and Senior Portfolio Manager at Canaccord Genuity Wealth Management. And as always, thanks for joining us here. It is 2021. We're well into January 2021 as filming this video. And as always, we want to take a big, deep dive into a specific topic. And this week, really want to talk about a market bubble, or are we in a market bubble here in 2021? There's a lot of speculation as to where things are headed, where things are at. Obviously, going to start in 2021, we've got a new U.S. President, and of course, markets at all-time high. So what does that mean for your portfolios? So before we dive into that, let's talk a little bit about market bubbles and how they're formed, right? What are they? So basically, a market bubble is when the stocks or potentially a particular sector gets overvalued, or people are paying too much for what it's actually worth. Pretty simplified, but we've seen it before. We've seen housing bubbles in the real estate market. The big stock market bubble of 2001 was the dot-com bubble. It was probably the last really big one. We did see oil have a bubble a couple of years ago. We saw gold have a bubble a couple of years ago. And really what drives that is just people's over exuberance, people just get behind an idea more than the reasons why they might be buying that stock. So, I wanted to examine a couple of things and really look at what causes that bubble. So this is the graph. You've probably seen it a million times. It's always talking about the market emotions. And some people call it smart money, the early entrance into the markets or into a sector. The institutional investors, so those are your fund companies, your pension plans, who, get in and they're buying on value, right? They go in, they do their analysis. They look at that sector or that particular company or that particular geography and say, hey, this is why we want to buy. We're buying it because the stocks are cheap, revenues are high, earnings are strong. Remember, it's a lot about earnings. How much money is that company keeping after they've paid all the bills? And how many times, we sometimes call it PE ratio, but how many times earning is that stock selling for? So that institutional money gets in there. And then what ends up happening after that quick, easy money is made, if you look at a graph like this, if you listen on the podcast, go to mikeonmoney.com, you'll be able to get this graph, or give us an email or a call, I'll send it to you. Like I said, it's pretty generic, but we move into media attention, right? So then the news starts to start to be spread, whether it's internet news, whether it's, traditional media, or just people talking about it. Then we start to see the overvaluation start to build. Then we get enthusiasm. People are like, oh, listen, this thing's taken off. I've got to buy it, or we've got to get in this sector. It's going to do amazing. And then it gets to greed, because now we've gone into the valuations are really high. And usually between enthusiasm and greed, we start to see those institutional and smart money start to peel away from certain sectors or from those overvalued sectors, or they could just be individual names, but usually it's a sector. And, taking the example of that dot-com sector, you start to see the investors or the institutionals moving away. And we saw that at the end of 2020. And we actually are still seeing it more and more. The institutional money managers are actually starting to hedge their bets a little bit when it comes to sectors, specifically certain tech sectors in the markets these days. Not all tech, that's too broad of a stroke. Tech has got a lot of subsectors in there, but in general, you're seeing the institutional move away from certain names as they see that really overvaluation happens, because then we get into the greed, right? And then delusion. People start thinking the new paradigm. This can't, I remember when oil was hitting 150. People were saying it's going to 200. It can't go down. It's the new economy. It's the new paradigm. We saw that with gold, years ago when it headed to 2000 for the first time. It's the new paradigm. And we're kind of seeing that now, right? People talk about how we've shifted with the pandemic, and I 100% agree with that. We have shifted our economy. We have shifted to different areas and to do things differently. But that doesn't mean it's a completely new paradigm. You still have to look at the fundamental values and what you're paying for and what you're getting. Because if you think about it, if the company's earning $1 and you're paying 10, you're paying 10 years forward earnings. So that company has to grow quite a bit in the next year or two in order just to pay you that $10 in earnings. So you have to really, really think about what you're paying for along the way. And then we'll see a pullback and people will go into denial. People will jump on that and say, hey, that's probably an opportunity to get back in. There'll be, it's called a bull trap. People will jump in there, buy it back up again, maybe not to the previous peak, but drive it back up. And then we'll see the real breakdown. The stock will start to fall. We'll start to see people run from it. Fear will come in. Fear leads to capitulation. That's where everyone kind of just gives up and says, yeah, this isn't coming back. Let's get out of this. So it sells down, and then it gets to despair. And that's where things like rock bottom. Now they're too cheap. And that's where, you go back to the start of the cycle again, where the smart money and institutional start to look for value buying. They're looking for that cheap earnings, and the stock price hopefully return back to what we call the normal mean. Where should it be valued at, given what's going on in the market? So if you think about that cycle, you've heard that before, you've heard it a million times. But let me show you, again, if you listen on the podcast, I'm flipping over to a graph of Nortel. So Nortel stock, this goes back from 1997 all the way through to 2004. It pretty much overlays to that exact same graph. We had a really, early rise, a run up. The institutional money got in. We've got, the big run ups. We had that bull, that fake bull come in. People run it back up again, and then straight and quickly down. And that's the big challenge with a bubble. Most people think, oh, I'll get out if it starts to come down. It comes down fast, and it'll be really, really difficult for you to jump out of something that's being affected by a bubble bursting. Hence the analogy. It's quick, it's fast, and it's over. So I'd be really cautious in 2021 here. Are we in a bubble? We're showing a lot of signs. And if you want to know the proof of that, just ask yourself, if you are a buyer out there in the market right now, or maybe you're talking to people, I hear it more and more. I heard this, I remember back in 2000, 2001, I was in early stages of my career, and I had a lot of clients, saying, Mike, why am I paying you? I can do this on my own. And that happens. That happens a lot in a bubble, because yes, it's hard to get it wrong when there's a bubble, because everything's going up. But it's that analysis. So if you are out there buying, keep in mind, in a bubble, you can make money. You can look at Nortel. Some people made money. They got out before it burst. Probably not because they knew it was going to burst, but simply they got out and they made money. Great for them. And if you're in there right now, you've been trading through the last year of the cycle that we've seen, and you've made money. Great. If you follow us on these videos, I always recommend taking profit off the table. Be cautious about you falling into that greed trap. Always be looking for taking some of that money off the table and diversifying it, but also looking for another good deal, another opportunity to make some money. Because when we get into these valuations, ask yourself why you're buying that stock. And I bet you, or ask someone who is participating in the speculation market or in the current trend market. Ask them why they're buying that stock. And I'll guarantee you, they won't be able to tell you because the earnings have increased, or they have no competition, or the ability for competitors to enter the market is really difficult, or that their earnings are expected to double this year. You know what? They're probably buying because it's a brand, it's in the paper, or I should say it's on the internet. No one reads a newspaper anymore. It's out there in the news, and they're buying on hype. They're probably not buying on rationale. So if I look at 2021, are we in a bubble? Really hard to say. It's easy to look at a bubble in hindsight, but I am seeing a lot of signs of bubbles in individual names in particular, and also in the broader market. Now, that doesn't mean no opportunity for 2021. Again, if we go back to 2000, which is probably the best textbook example of a bubble bursting, There were some fantastic financials took off in 2001. Oil took off in 2001. There were great areas of the market that did very well outside that dot-com sector. So yes, there's opportunities. In fact, we're going to do more deep dives on 2021, and I think value is going to really outperform in 2021. I think it's been ignored over the last year. It's a lot of money. A lot of that retail money has moved into that, call it, news cycle type of buying, and not really been looking at what's cheap, what's a good deal, what's a good buy. And I think value is going to do well. I also think small cap is going to do well for smaller companies. Again, be careful of sectors, look at your diversification. But whenever we see an economic shift like that, certainly what we saw in the pandemic, and I've talked to you again, if you've listened to my videos over the last year, I've always said, this is the bit, the pandemic, the closing of the economy, it's been like a wildfire. It's gone through, yes, it's done a lot of damage. It's taken out a lot of, old established growth, but it does make way for green new things that come up from behind. And that's the smaller companies, the innovative companies, the ones being able to come in after the damage, plant the seed and grow from there. And that's where I think small cap is going to do well this year in 2021 to take advantage of that change that we've seen. So don't, I wouldn't give up on 2021. In fact, we're very bullish on the opportunities. It's definitely going to be volatile out there, but volatility does not mean not opportunity. Volatility actually means opportunity. That's where we make the best returns. So, when you're looking at your 2021 portfolio, do take that, not pessimistic approach, but take that realistic approach. Why are you buying those names? Why are you putting them in that portfolio? Have a reason. If you have a reason, you can always go back to that. Has that changed? That can help you with your decision where you want to buy more. If it's pulled back, maybe you want to buy more. We had a name in the portfolio this last week. We bought it really well. We bought it really well. We'd gone up significantly. The merger, and we didn't buy for the merger. It was a merger they were looking for with a French company called Carrefour. That was blocked by the French ministry. The stock fell again. That didn't mean it's a bad company. It didn't come down to the lows where we had bought it. But to me, that was a buying opportunity. We've already picked up a bounce of a couple dollars on that. And that merger's not even dead. They've got some political hoops they have to deal with. Maybe that's going to come back. And those are the opportunities you have to look for. Know why you're buying it. If it does pull back, know what to do with that, right? Should you just get rid of it, or should you, invest some more in it? Maybe it's another opportunity. And if it's going up, know when to take some money out. Know that there's reason. What reason is causing that to go up, and is it something that you should act on or take some profits out of it? So I'll leave that with you. As always, come visit us at mikeonmoney.com for these weekly videos. Also, we are going to dive more into 2021 and what's going on this year. Every Tuesday at noon, we do a live video, give you an update on the markets. We talk about what's going on in the news and things that you can actually act on in your portfolio. But with that, remember, everything we talk about on these videos is just for information purposes, educational. Don't apply these strategies to your own portfolio without talking to a professional or doing your own due diligence to make sure that these strategies are right for you. And with that, I'll talk to you next week. Thank you.